On today's episode, we are going to take a look at what happened in the stock market today. So let's get started. Like I mentioned, today we are going to take a look at what happened in the overall market. We're also going to take a look at some stocks that reported earnings. For example, Gamestop, Chewy, and AMC. They both reported earnings. All three of them reported earnings today. So we're going to do a quick overview on them. Next, we're going to take a look at any trending stocks that were happening and how they moved. We're going to take a quick look at Nikola. We're going to take a quick look at Airlines stocks and at Hertz. Finally, we're going to look at any companies reporting earnings tomorrow. And before we go any further, guys, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly appreciate all the support I'm getting from you guys. And after this video, I am going to do a full depth analysis of one of those companies that just reported earnings. I think today I'm going to take a look at Gamestop. And if you are new to my channel, normally what I do is a full in-depth analysis every single day on a brand new company where I take a look at everything from revenue growth to market to customers to competitors. So I do a full in-depth analysis, but at the same time I want to understand what's going on in the overall market. So I hope you guys enjoy. All right, so the first thing we're actually going to take a look at is that Gamestop. Gamestop reported earnings today, and after hours this company is down about 3%. Most of the articles I'm going to take a look at are from Seeking Alpha, so make sure to check them out. But here in Gamestop, quarter one non-GAAP earnings per share were a negative loss of $1.61. And even though it was a loss, this actually beat expectations by 8 cents. GAAP earnings per share were, which is even worse, a loss of $2.57, and this actually ended up missing expectations by 43 cents. So GAAP earnings per share were a lot worse than what was expected. This company's revenue was $1.02 billion, which was down about 34% compared to the same time last year. And that's crazy, right? But Gamestop is one of those stores that had to close down due to COVID-19. So it is still pretty crazy, but it's still pretty crazy to see such a huge decline in revenue drop. Gamestop comparable sales, and if you guys don't know what comparable sales are, this is when the same stores are compared to the same time last year. So for example, if they have some new stores, those don't count here on comparable sales. Gamestop comparable sales are down 30% compared to the same time last year. And this is actually worse than what was expected. It was expected for them to be only down 27.5%. But again, one of the major reasons was due to this whole COVID-19. They do mention that comparable store sales, excluding stores that were closed down, were down 17%. So those stores that were not closed, they still saw a decline of 17%. And I don't like seeing that, right? But I understand, right? Even if they were open, people were probably still not going out there to buy games right now. And especially right now with the whole trend of moving into the digital games. Even myself, right? Just this quarter, I normally like to buy my games in physical copy. But as time progresses, I am moving more to buying digital type games where I don't have to go to the store to purchase it. One thing though, this company, like I mentioned, saw about a 30% decrease in overall sales, but they did see about a 520% increase in their e-commerce sales. And I think this is actually pretty impressive, right? Right now, this is something that every company is trying to grab, and is that e-commerce market. And to see an increase of 500%, I think that's actually pretty good news, because usually when you start buying things online and you have a good experience from it, the chances of you buying from that place again is actually going to increase. So it is pretty impressive for them seeing a 500% increase compared to the same time last year. The company did end the quarter with $570 million in cash. And like I said, guys, normally I do a full in-depth analysis where I take a look at everything from their balance sheets to the company's valuations. And Gamestop, I think, is the company I am going to do for today. So don't forget to hit that subscribe button so you guys get updates on when I post that video. My most recent video was actually Activision versus EA Games. So if you guys are big into gaming stocks, that is definitely one I recommend checking out. The second stock we're going to take a look at is Chewy Stock. And Chewy Stock has actually done amazing since the overall market has tanked. This company has returned about 76% before reporting earnings today. After hours, this company is down 2%. But right now, with people being home, I'm guessing they're spending more time with their pets. So now let's take a look at their earnings results. Quarter one GAAP earnings per share were negative 12 cents, which actually beat by 5 cents. This we're gonna see. I took a look at this company yesterday. This is a company that is a heavy grower, and we can see, right, revenue this quarter was up 46% compared to the same time last year. And normally when you have a big heavy grower company like this, what ends up happening is right now they're spending more money on advertising, on collecting more sales and trying to build up that huge sales, and eventually they start to dwindle down on that marketing and just start collecting the positive earnings per shares. So this is what we're seeing, right? A 46% year-to-year growth is definitely a strong grower. One of the big things they said this quarter is there was a nice increase of the average customer spending. And like I said, right, probably due to COVID-19, more people are spending more time with their pets. More people see their pets probably a little more sad. They're buying them more toys. They're buying them more food because they're home more often. So they're probably feeding them even more. So they're seeing an increase compared to the same time last year on the active customer sales. They do mention that they are in a well position to expand the overall marketplace. Next, the next company we're going to take a look at is AMC, the movie theater. This company after hours is up about 3%. That's after being about 7% down for the day. It's currently sitting at about $6.22. And let's take a look at this company's earnings. Quarter one non-GAAP earnings per share were a loss of $2.22. Their GAAP earnings per share was a loss of $20.88, and these are due to some one-time expenses. The revenue for this company was not even $1 billion, and I think that's pretty crazy. This was down 22% compared to the same time last year. So I honestly did not know this company made that little bit of money. I for some reason, I thought revenue for movie theaters were a lot higher than in the 1 billion. But that's how much I know about the movie industry. But yes, this revenue was down about 22%. So one of the main reasons that I can see investors buying up the price right now is they did mention that in their two largest territories, which is United States and United Kingdom, theaters are going to be almost all open by July. They also give us a huge list of movie theaters coming out right after: SpongeBob, Wonder Woman, Kingsman, Black Widow, Top Gun. They're even also doing Disney Mulan on July 24th, and Tenet, which just released a trailer a few days ago on July 17th. So they are showing you why you should be bullish in the movie theater right now with such different movies coming out. One thing though, if you guys don't know, there was a huge fight between Universal and AMC. Universal released that movie Trolls, and AMC was like, you shouldn't do that. We are the ones that you should wait for us to come back into business and not release the movie. So there is some bad blood right now between Universal and AMC for that little stunt that Universal played. And at the moment, no movies made by Universals are currently in their showing list. And I wonder who is going to win out of this, either Universal or AMC. And the reason this is crazy, right? Because if Universal does show that, hey, we don't need movie theaters to make money, then more movie distributions are going to continue to do that, and they might start pulling away from AMC. The next thing we're going to take a look at are a few trending stocks. The first one is Nikola Corporation, right? The Tesla rival. This company right now, I think it's crazy. We're sitting at a $30 billion valuation right now. But hey, I've been wrong, and that's why I have not made money in Nikola right now. I have not invested. And right now, the main reason this company is surging is yesterday they announced that they have opened up reservations for their new pickup truck. I did talk about it in yesterday's episode. There has been no news updated. It's up 8% for the day, but after hours is actually down 7%. I know when it opened up this morning, it was up over 23%. So this is crazy. One of the biggest beaters that happened this market was just the overall airline stocks. United Airlines, for example, dropped down 8%. But remember, these past few days, these companies have returned strong returns to their investors. Delta Airlines was down 8%. We can see just between all of them, Southwest was down 6%. So all these airlines, after a big ramp up, are pulling back down. The final one we're going to take a look at is Hertz. Hertz just, I don't understand what this whole new investment style is. When a company goes bankrupt, they're actually going up in stock prices. Ridiculous. Hertz reported bankrupt about a few weeks ago, right here, and it dropped down all the way to $2.82. Since then, this company has, even right now when it dropped 25%, this company has returned 646% to those that invested at the bottom. And if you invested at the peak, you would have made over about 900%. So this is pretty crazy. These companies are just moving insane. For me, I am a long-term investor. Like I say, I do full depth analysis. So these are companies that I don't invest in, but I can see why traders are making money out of these movements, out of these volatile stocks. And I'm not going to knock anybody's hustle for the way they make money. Like I said, for me, this is too stressful for me. I'm usually a long-term investor. I sit down, read my 10Q report, read my 10K report, put a few $1,000s in a company, and that's it. And actually tomorrow, normally I take a look at companies reporting earnings tomorrow. There's actually no real companies that I know that are reporting earnings. The only one is before open tomorrow is Red Robin, and I actually want a burger now. So I'm probably just gonna go outside after this episode and grill some burgers. Actually, no, never mind. I have to do GameStop video first. So like always, guys, I hope you guys enjoyed this episode. Make sure to hit the thumbs up, subscribe, and hit the bell. It helps the small channel out so much, and I truly, truly appreciate the support. Take care.